Welcome to SmithWeekly Discussions, an occasional program for our members at SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Brent S., Michael N., at Ohio D1R1, and Paul M. Returning to the program today is Mr. Ron Thiessen. Ron is President and CEO of Northern Dynasty Minerals. The company is advancing the large-scale Pebble copper gold project in southwest Alaska. Northern Dynasty is a portfolio holding at SmithWeekly Research. The company is listed on the New York Stock Exchange under the symbol NAK and also on the Toronto Stock Exchange under the symbol NDM. Mr. Thiessen, it's a pleasure to have you back. How are you, sir?
I'm good, Andrew. Please call me Ron.
Well, Ron, it's been a while, over 2 years, if I recall correctly. Amazing where the time flies here. And maybe the time doesn't look so fast for you on your side with what's happening, but nonetheless, lots to talk about. But maybe let's just kick things off here, Ron. Maybe just some opening remarks from you on this marketplace, copper, gold price environment, et cetera, and then also the status of growth at Northern Dynasty.
Well, it's hard to find the right adjectives other than, stunning, wonderful, enjoyable. I'm very happy with, the commodities marketplace right now, obviously. I mean, if we look back, a year and a bit ago, I think copper was trading, keeping its nose barely above $2, and now we're above $4. So what a wonderful turnaround. And I guess, I'm not surprised. On one hand, it's taken much longer than I thought, but then that's pretty typical, I guess, with the mining industry and the resource sector, that things do take generally much longer than you anticipate. But certainly, where we are today, a huge amount of uncertainty combined with really production shortfalls, especially in the copper concentrate markets and clean copper concentrate markets. And that's led to, a combination of things. Number one, obviously, warehouses with not a lot of copper inventory in them, and smelter groups, and obviously China is the largest smelter capacity in the world, desperately seeking copper concentrates, and especially clean copper concentrates. So TCRCs, treatment charges and refining charges, are, I haven't seen them this low since 2004, which was the year we came out of nuclear winter from the late 1990s. And I've probably seen some that are even, unbelievable in that, some trading groups are prepared to offer 0 and 0 treatment refining charges just to be able to fill their book with concentrates, because they know that some smelters are going to pay for clean concentrates. And then because of the overall shortfall of availability of the raw material, the copper prices have accelerated. And I think a lot of that has to do with the big push by just about everyone, especially the political class, but about the green initiatives and the desire to change, in effect, our primary source of power for certainly transportation, commuting, and the like, from the carbon, oil, and gas based products to electrons. And fundamentally, electrons only travel efficiently, both cost and impedance, on copper wire. And so the amount of copper that goes into this new economy, people are just starting to come to grips with it. I mean, your typical windmill has about 5 tons of copper in it. And when you look at these wind farms, there's 100 windmills, and so that's just in the armature. You then have to aggregate all that power. So you've got, tens, if not hundreds of kilometers of copper wire bringing those electrons to a central distribution system. Typically, the high energy lines are aluminum, but then when they step down for distribution into the urban centers or where they're going to be used, once again, a massive amount of copper is required. Every one of these EV charging stations has, at least a couple 100 pounds of copper in it. So it truly is, going to be a massive change. And then on the other hand, we haven't had a great deal of investment in new mining opportunities, especially on the copper side. Yes, obviously Robert Friedland's Kamoa has come on stream. There's a couple like Quellaveco Anglo in Peru that's scheduled to come on stream, but those barely put a dent into what's happened in some of the really big mines around the world, like Escondida, where it wasn't that long ago that they were mining at 1.25% to 1.5% copper, and now they're down to 0.8. So, they process the same tonnage, but they produce half the amount of copper. And to try and just stay level where they were a decade ago, they end up investing $6 to $7 billion in expansion capacity. So there's been all of this demand, and we haven't seen the true numbers yet. We're just seeing the anticipation, and we've also seen a reduction in production because of head grade depletion. I think it's the stars are lining for the copper miners. So I'm pretty pleased with all of that, obviously, and the other metals as well. In terms of Northern Dynasty and the Pebble project, we had, up until, I can tell you the date, July 25th of last year, a spectacular 2.5 years under the NEPA process, under the auspices of the U.S. Army Corps of Engineers, to get to our final EIS. And it's probably one of the most comprehensive and positive FEISs that I've ever read. Not that I've read hundreds of them, but after seeing the draft, I went looking for other ones. That was in spring, and read them, and went through about a dozen. And the Pebble project, truly, the FEIS was very conclusive about things like impacts on the fisheries, the commercial fisheries, on the sustainability, on the sustenance fishery, on water quality issues, on socioeconomic issues. I just sat there and said, well, there can't be anything come out of this but a positive decision. Yet when the final decision was made in November, it was negative. The one downside that we had a lot of anxiety about is the fact that last step in that permitting process, called the mitigation process, was falling during the election cycle, which was fundamentally August through the November election date. And you never want to be, a big anything during an election cycle, because there's a lot of moving parts in those elections. And, if you end up being a part, somehow participating in some issues that have to be resolved, the give and take of the political system during elections, it's not pretty, and the outcomes can be, completely diametrically opposed to what reality says. And I believe that's what happened to Pebble at the end of the day. And so, in a nutshell, we got probably one of the greatest final environmental impact statements that you can imagine. We were saddled with an extremely onerous mitigation requirement, which I believe we met. It was so onerous that I would venture that I doubt that there could be another project developed in Alaska that could meet the kind of mitigation standards that were imposed on Pebble. Yet I believe that we provided that. Still, once we submitted our plan, it was within a few short days that they had rejected it. It's almost as if, there'd been a foregone conclusion because of the dynamics of the election that this thing couldn't proceed at that time. So that's fundamentally where we ended up, with a positive administrative record on the FEIS, what I believe is a tremendous compensatory mitigation plan, but a negative ROD. And the next step after that is to obviously appeal that decision. That was done. We filed our appeal in January. About a week, 10 days ago, the U.S. Army Corps of Engineers, the Alaska Division submitted the final administrative record for the purposes of that administrative appeal. And now we'll have a review officer assigned to that case and go through a period of appeal. Technically, the regulations say 90 days. Well, it took them 90 days to put the record together, although it must have been together in the first place because they made a decision. But we think, given Pebble's stature and some of the controversy in the amount of detail, that it's going to take longer than that. I mean, sometimes these appeals can take a year, but I am hopeful that that's not going to take that long, because I think the record pretty much speaks for itself, and it's in our interest, and I believe it's in Alaska's interest to see a decision on this before a year. In fact, I'd like to see it before the end of this year. And how can that decision go? Well, I mean, fundamentally, they can uphold the negative decision on the ROD, and understand that the decision on the ROD, which is the record of decision, is what the ROD stands for, has to be supported by the administrative record. So, I mean, that's why we've got this, big issue is the FEIS was so definitive and so positive, yet it appears in their decision-making process, they totally ignored it. And they issued the denial before the permitting process was even complete, which is, again, never seen that happen before. So I think there is room for optimism on the outcome. So like I said, the decision could be uphold the negative decision on the ROD, in which event ourselves, and I believe the state of Alaska and some of the native corps, village corps in the region, would appeal that to a judicial proceeding as opposed to the administrative proceeding. We can't go judicial proceeding until the administrative appeal has been finalized. They could completely reverse the decision and make a positive decision, which would please me. But again, I think that's a bit remote, just from the standpoint that, to tell you the truth, the permitting process had not been completed. Alaska's material had not been submitted. And again, how they can make a decision without Alaska being part of it is, it's complete, unknown to me, because Alaska is probably the key player in the entire process. It's state land. It's the state that owns these mineral rights, and yet they didn't bother to take into account anything Alaska had to say. So I don't think they can flip the ROD around to make it absolutely positive. And then the third alternative would be to remand the record decision back to the division in Alaska and say, complete the permitting process and redo the decision in accordance with the administrative record, and then we'll see how that comes out. But that's where we are today. That said, we're busy on doing a lot of things. We've got a small field program scheduled for this summer. We're doing a bunch of things that we would have done even with a positive ROD. We're doing some metallurgical work, trying to fine tune a process. Our development plan had not contemplated a gold recovery plant, a pyrite gold recovery plant, because we undertook not to use cyanide. So we've taken this time to go test some alternative lixiviants like thiosulfates and glycine and the like, and we're seeing some promising results on some fronts there. And we're also tweaking some of the engineering, working on some water treatment alternatives and the like. So we have by no means given up on this project. I mean, it's probably the preeminent polymetallic porphyry deposit in the world today. And it's a huge asset for the state of Alaska, especially when you consider that, people are trying to turn off the taps on oil and gas, and that's been the mainstay of Alaska for the last 40, 50 years. And turning that tap off will very much impact the state of Alaska revenues. And I'm going to say that probably 80% of their revenues come from the oil and gas side of the business, and they'll need something to replace those things. And not that we would replace it all, but certainly there's royalties to receive, taxes to receive. We'll employ a lot of people. We'll spend close to $500 million a year in state on supplies and consumables. We'll have, you know, over $100 million in payroll. So all of that will probably benefit, you know, the GDP of Alaska by, you know, something well over $1 billion.
Ron, it's a needle mover. Lots of stuff you cover here. I appreciate the overview on status and possible outcomes. The copper situation is interesting just from the standpoint that Northern Dynasty is a prime example of big projects around the world that are slow to advance. The permitting bottleneck is causing and will cause in the years to come significant issues as far as supply demand fundamentals. I think that's where we see the copper price continue to drive ahead. If you said that Kamoa didn't make a dent in what we have, and you are more privy to the copper market than I am as far as information and time spent on actually, you know, drilling down and getting all the nitty-gritty details sorted out. In addition to that, things like Florence, which probably move forward here this year to SECO, that's not even a paint scratch on this market. It's good stuff to see here and really good for what's about to come. Where do we go from here? You know, it's like dealing with late stage Rome as far as the jurisdiction and some of the thought processes, not include Alaska in what I said there, but certainly from a federal standpoint, it literally is to the point of dysfunction. It's not only in this particular agency, government-wide, if you will. It's challenging, but talk about your resolve for a moment. This is something that's important to point out. You guys have been going over this and dealing with this project for such a long period of time. You're not a spring chicken anymore. What is the resolve of Northern Dynasty, the resolve of HDI, the resolve of the partnership?
Well, that's the nature of the business. In the mining industry, you have to have a thick skin. You have to be determined. I mean, the reality is, you know, most people would say, well, I don't want a mine in my backyard, but I want everything the mine's got to give. And so, I mean, you don't see many mines anymore near urban centers and the like, and we go out and we do this. We know that we have to demonstrate that we can coexist with other industries, with other natural resources, which is why we put so much time and effort. I mean, we spent $1 billion on this project to date, you know, and I'm going to say that our environmental baseline studies they're far more pervasive and far more detailed than any project that I'm aware of. And I think the mining industry is that way, you know. I mean, I look at the US and there's 5 large mining projects, copper mining projects in the US today. The 5 largest are all under permitting issues. Pebble, Resolution, Rosemont, Twin Metals, and Polymet. You know, and it's not like the US that they only need 1 or 2 of them. They need all 5. You know, we need all 5 in North America. You think of, I mean, you know, when the US manufactures about 15, 16 million cars a year, people by 2030, they want all those cars to be EVs. Well, at a minimum, every car is going to have 100 pounds of copper. I mean, a Tesla has 185 for a single axle drive, but at 100 pounds, and then you look at the other markets in the world, there's about 80 million vehicles a year manufactured. And the amount of copper that's just going to go just in the EVs, and that's not the majority place for copper. The power generation and power distribution is far larger than that. But our needs, you know, are phenomenal. I was reading a report earlier this week from Jefferies. I mean, Goldman Sachs published about a month ago that they expected copper to hit $5 a pound next year. Jefferies figures it will hit $7 a pound by 2025. That's all supply and demand dealings. And, you know, we haven't had a great deal of investment in the mining industry because commodity prices post 2010, 2011, commodity prices, you know, fell. And so that period didn't see any development. There hasn't been a great deal of development. And Kamoa, while it's a great mine, you know, it barely scratches the paint in terms of the overall demand. I mean, we consume about 25 million pounds of copper a year. That's a huge number. And it's going to grow by at least 30% in the next decade, and at least 50% in the next 2 decades. So, you know, and all the high grade deposits are pretty much gone. I mean, we found them. The easy stuff is gone, and you know, we need tier 1 assets. We need Oyu Tolgois, we need Pebbles, we need Resolutions. You know, and I think the mining industry is changed tremendously over the last 30 years. I mean, yes, we've got tailing storage facilities that are problematic and that are failing, but most of those are pretty old technology. And yes, we need to go back and ensure that they aren't failing in future, even if they are old technology. But you know, upstream design, I mean, nobody's allowed to use that anymore, certainly in the developed world. Dry stack or a form of dry stack tailings come to us, and we're embracing that. We're embracing, you know, lower energy costs, trying to do more with less. Ore sorting, we know that probably 80% of the metal is contained in about 30–40% of the ore. And so if we can start sorting, you know, in the pit or at the face, I mean, you know, at Gibraltar, we're using shovels that actually do ore sorting in the shovel. They can tell whether how much ore and the grade in the shovel by refractory processes, and whether that should be a shovel load that goes to the waste pile or goes to the mill. And that way we reduce comminution, which is crushing and grinding costs, which is where all the energy goes in the mining sector, is in your taking, you know, big rocks and making bug dust out of it so that you can get the metal out of it. So, you know, my partners and I at HDI, I mean, a lot of people ask me, well, after the negative rod, what do you plan to do? And I said, well, you know, my shareholders will have me. I'm staying here. I'm just one of those diehard kind of guys that this is just too good, too big to simply walk away from. And nobody's going to walk away from Pebble anyways. I mean, it's, you know, you can turn down one development scenario, doesn't mean that another development scenarios. I mean, one of the things that we're looking at right now is how to approach an underground mine. I mean, we always said for the last 2.5, even going beyond that, is that the initial phase of this mine would be open pit, because the ore body outcrops, the waste to ore ratio for the first 20 years is 0.1 to 1. It makes it very inexpensive and also low energy consumption, because you're not having to move 2 tons of waste for 1 ton of ore, which is the average. But we always said that you know, in subsequent decades, we could see a real opportunity to chase some much higher grade ore at depth, you know, down 1,000, 2,000 feet. Not dissimilar to the way that Oyu Tolgoi is taking that approach. And so we're doing some work on that right now, and hope to have some news out, you know, summer or fall, about what this project could look like in perhaps an underground scenario or a hybrid scenario, where you're taking ore from both the open pit and the underground to feed the mill. And the other thing about the underground is then you're not pushing overburden around waste rock. You're not stripping it and piling it up in the valleys. I mean, there is subsidence, but you're pulling just pure ore out of the underground and not dealing with waste rock. So, I mean, you know, there's a lot of ideas we've got. There's so many variables in mining, and it truly is changing quite dramatically. You know, when I look at what the Gibraltar mill looked like when we bought the mine, which was a mill that had been built in the early 1970s, and what we did to that mill, you know, over a 6-year period from 2006 to 2012, and how we changed it. I mean, it's phenomenal. We went from 100 float cells to 9 large volume Outokumpu cells. And dare I say that if we were doing it today, we could probably get by with 3 large volume Outokumpu cells at Gibraltar. So lots to do, and we're here for the long haul.
Ron, I appreciate that. you have options, whether it's a potential, lawsuit route on the outcome that would be expected one way or the other. And then of course you have the new application route, which is what you suggested here as far as different mining methods and so forth. So it continues. And I think that's the important part here. But, one of the things that has been pointed out from some skeptics, not on the environmental side, Ron, but other skeptics out there, basically other investor groups who believe the project is uneconomic and believe the deposit will never see the light of day for one factor or another. Maybe some of these investors have been slapped by volatility over the years. Perhaps some of them never took profits during the rise during the last cycle, 2011. What do you say to investors about the economics here? Because it's striking distance that copper is $5 a pound. And in my view, their estimates are conservative. Some of the ones you mentioned, Goldman Sachs, Jefferies, I think it goes higher on copper. And then you have gold. There's no doubt in my mind that gold will be a 2,000 an ounce moving forward. What do you say about economics? Because I'll tell you what, economics have changed substantially here.
Economics usually looks after themselves. People were, during the permitting process, people say, well, yeah, is this thing economic? And our detractors are saying, why are you bothering to evaluate this project for a permit? It's uneconomic. And we did provide material to the Army Corps of Engineers to demonstrate its economics. And, even for them to make a decision on the transportation corridor required a certain amount of economic background, because the method that they use is called LEDPA, the least environmentally damaging practicable alternative. And practicable means economic. So they did look at that in a gross scale. But I usually tell people, listen, without a permit, it almost doesn't matter what the economics are, because you can't build anything. Economics are important the day you can make a decision. And so the most important thing is getting a permit and what can you build, because what and how you build determines, to a large extent, the CapEx, which is the biggest upfront cost in determining the economics. This project, I go back to the 2011 PEA. We did a huge PEA, over 600 pages in 2011. And a year ago, the economics, even throughout that PEA process, beginning of 2018 through to July of last year, the metal prices were all better than what we'd used in our 2011 PEA. And the CapEx, when I looked at the 2011 PEA, hot rolled steel was $1,200 a ton. Well, during most of that period, hot rolled steel was $450 a ton. In 2011, Brent was, I can't remember, $125 a barrel. Through that period, Brent probably averaged about $45 a barrel. So to me, I said, we're not going to publish a PEA on the economics until we get some definitive outcomes on the rod. And because we've got quite a few alternatives in that permitting process that we need to deal with. And that the mining industry and commodities are a cyclical business. And, do you pick the numbers at the bottom of the market? Do you pick the numbers at the top of the market? No, you tend to pick, something that's in between that you think is sustainable long-term. And Pebble has some very unique features. Like I said, Pebble West, the waste to ore ratio is 0.1 to 1. So almost everything you mine goes to the mill. Well, if it costs $1 a ton to mine a ton of rock, the average copper porphyry mine, you have to mine 3 tons to get 1 ton of ore, 2 tons of waste and 1 ton of ore. So you get $3 for the ore that's delivered to the mill. Well, in Pebble's case, it's only $1 because there's no waste rock. So, what's the worldwide average? I shouldn't say worldwide. What's the average cost in North America of open pit mining and processing at a porphyry? It's probably something in the order of $9 to $12 a ton. At Taseko at Gibraltar mine, it's about $8 US a ton. Well, we just saved $2. Taseko's waste to ore ratio is 2 to 1. Most of the porphyries in Arizona are at least 2 to 1. So we just saved 20% because of the lower mining costs. It's got a very clean concentrate. People are going to pay a premium for that. And it's a polymetallic. I mean, when you looked at the PEA from 2011, we actually produced copper net of byproducts at minus 11 cents a pound. And oh, by the way, we produced 500 million pounds of it a year. So even copper at $2, as long as gold was 10.50, the copper was effectively free, paid for by the gold. And now it's even better. I mean, when we look at the metal prices today, we're doing some of this work. We may come out with some economics this year because, you know, the rod has been put behind us. We always said once the decision on the rod has been, then we'll take a look at economics. We'll be prepared to discuss that in more detail. And I think we're getting there, even with the negative rod. I want to ensure that the politicians, I know the governor of Alaska, and I know that the executive branch in Alaska, they know the value of this deposit and what it's worth. But we need to make sure that, you know, Washington, D.C. knows what the value of this deposit is and why it needs to go into production. I mean, the unfortunate thing is that the world seems to have come into the grips of the anti-development crowd. I mean, the most ridiculous proposition I'm hearing these days is that out of NRDC and Earthworks and the like is that we don't need any mines. We can recycle copper and it'll provide 100% of our needs. Well, we recycle roughly 60 to 70% of copper. In fact, 2/3 of all the copper that's ever been produced is still in the system because of recycling and reusing. And so we recycle 60 to 70%. So we recycle about 8 million tons out of 25 million tons a year. So I don't know where they're, you know, if you improve your recycling from 60, 70% to, let's say 100%, okay, then you're going to go up to maybe 11 or 12 million tons. That still leaves you 50% short. I don't know where you're going to get that copper from. It's ludicrous. You know, if we want this carbon-free energy, copper becomes the most important commodity. It's more important than, you know, the battery commodities, because before the electrons get to the battery, they have to be produced and they have to be transported and distributed. Copper is the most critical, I believe, element in this whole green initiative to transform society into electrons. I mean, there are thousands of kilometers, miles of copper wire in large apartment buildings and office complexes. You think of how many electrical components you use compared to the 50s and 60s and 70s. I mean, I remember, you know, houses that were built in, you know, pre-1980 typically had 2 electrical outlets per room. Well, now you have at least 4 and generally 6. The amperage, you know, mid-80s, certainly pre-1980, you had 100 amps. Then some of the larger houses started getting into 200 amps. I'm now seeing houses being built with 400 amps. We need that much electricity for everything that we do. Vancouver has brought in a bylaw that I believe after 2023, no buildings are allowed to be heated by natural gas. It's got to be 100% electricity. I mean, I would say that probably 80% of the buildings out there in Vancouver and that are under construction use natural gas for heating. Well, after 2023, you can't use natural gas anymore. And that's the way most development's going. So when I say that the cars are the small part, just think if every condo building gets built and it has to be heated or cooled with electricity as opposed to natural gas. It's just unbelievable the numbers that we're going to need in terms of copper production. And there's no way that recycling gets there. I mean, we will still recycle all of that we can, but there isn't enough in the system yet. And when does it become a closed circuit and sustainable purely because of recycling? You know, probably not for another 50 years or more.
Oh, absolutely. At the very minimum, these folks who are quoting these numbers, and these are the same people who won't throw away their iPhone, Ron. So that's not going to work.
All drive Teslas and live in Santa Monica. And I mean, it's a business, you know. It's
it is.
Every document they push out, every email they push out, every ad they push out, it has a button. It says click to donate here.
Exactly. It's all electrified. There's a lot of copper that's going into this, and to solve Vancouver's problem, you could use nuclear power for district heating and also solve your problem, a lot of problems.
I just read a great book. It's called The Plague Cycle. You know, you mentioned the end of Roman times. I mean, that was actually brought down by the plague of Justinian. But what I found very interesting is, you know, these days, you know, people are so anti-development. It's almost like, you know, we wanna get rid of the Industrial Revolution. We want to do away with the last 300-400 years of history because we're not happy with the outcome. Instead of looking forward and saying, okay, where can we take it from here and move forward and do better? Let's cancel what has transpired. And so they're losing sight of what all of this development has done for the world. I mean, the average age, life expectancy for a person living in Victorian England was about 31 years. And it really only started to change substantially after World War I. You know, the Industrial Revolution has been great for the world. I mean, there's more people, healthier people, more middle-class people in the world than there's ever been before. But if you're going to cancel all of industrial development, we're going to go backwards.
Ron, it's a simple matter of you want some sanity to return.
Yes.
Let's take away clean water. Let's take away your sanitation. Let's take away your garbage pickup. Let's go ahead and take the roof off your head. Let's go ahead and cause economic troubles to where you can't support anything. And then let's throw in a few blood in the street moments. And there you go. All of a sudden your thinking's changed. And now it's about clean water. It's about having stability, no more wars in the streets. It's about putting a roof over your head. It's about now making a system where I can actually make money and thrive and actually build something for myself and for my family first. So to me, this is one stage of a cycle, and we're living in it. Maybe we don't see it in our lifetime, maybe we do, but certainly it's one of those types of setups here that I think is taking place. You know, we're human beings, man. We have sex, we crap, we eat our food. We do these things just like people before us did. We're basic creatures. It's pretty interesting there. Switch gears here for a moment, Ron. Let's talk about just the capital structure here of the company. Can you just share with us where we are on shares out here, cash, and how far will the current cash carry the company?
So, I mean, the good thing, I guess the one good thing in all of this is that, you know, the administrative appeal doesn't cost you a whole lot of money. You know, and most of the work has been completed, physical work at the site, obviously, you know, 1 million feet of HQ core drilling that doesn't have to be done. The massive amounts of metallurgical test work has been done. We're doing fine tuning on, you know, gold speciation and the types of lixiviants that we can use for recovery of pyritic gold. So that the numbers are pretty low. You know, we've got, you know, at least 30 million US, I think, coming out of mid-year this year. I would expect that we'll end the year with at least half or more of that in the treasury. And, you know, we still got lots of interest in people making investments either in the asset or in the company. And so from that standpoint, I'm feeling pretty good. There's about 500 million shares fully diluted out there. Probably about somewhere between 30 and 40 million of them are out of the money. Will they happen? Hard to say. I mean, if we get either a positive decision out of the ROD appeal or even a remand decision, then, you know, maybe a bunch of those do get done before the year end. But there's about 500 million shares outstanding, fully diluted. From that standpoint, I feel okay, and you know that we've got funding available to us, and we've got other people that are are interested in doing it. And we don't have a big burn rate coming up. I mean, although, probably the largest part is lawyers, and nobody likes to pay lawyers. At least I tell our lawyers that. At least, we're not spending big money on doing exploration or engineering work at this point in time. Most of that is done. It's fine tuning work. There's a bit of a care and maintenance project. I'm going to say we're probably going to spend something like $1 million at site this year.
I want to switch gears here yet again, and I'm kind of disorganized here in some of my thought processes here, but David Lowe, a good man, a tremendous contributor to the natural resource business, specifically in porphyry deposits, very high regard for the Pebble deposit. How was the relationship with David, and what was his reasoning for really giving this deposit such high marks?
Well, David was a giant in the industry. I mean, it wasn't just Escondida, it was many more projects, and he advised on a lot of projects. It's interesting that David was a mining engineer, yet in many senses he was a discoverer. He wasn't a geologist, he was a mining engineer. And what he liked to say is that he in many cases knew how to turn a accumulation of mineralization into a mine. And that was one of the keys. I met David Lowell the first time, I believe it was 1986 in Santiago, Chile. And, had some other dealings with him through the years, but I had the great pleasure of having dinner with him in San Francisco. And I think that was like October, November, 2016 or 2017. I think it was 2016. And he was invested in Pebble. He was a good acquaintance of Marin Katusa and Doug Casey and the like. And we were all having dinner, and he said, Ron, I'd really like to get up to Pebble. And I said, no problem, David, I'd love to have you. Next time I'm going up, there's no question, I'll call you and we'll go up to Pebble. So that's like October, November. In January, I get a call and he goes, it's been 3 months. Haven't you been up there yet? And I said, well, it's dead winter and there's like 3 hours of daylight. No. And he said, well, when are you going to go up? I said, well, I'm thinking May, June. And he goes, that's all. That could be a long time away. I said, it's not that long. He said, well, for me, it could be a lifetime. I mean, because he was 91 or 92. And as it turned out, we went up in June, and he had in his mind something very particular. He said, on these very large porphyries, you need to assess what are called geological domains, and the mistake that a lot of mining engineers make is they try and build a mill, a metallurgical process that will handle all the different geological domains. And yet we know that the way these deposits are formed, the mineralogy is different in each one of those domains because the mineralogy was created at different times, maybe 1 million years apart. And so it's extremely difficult. And so he came up there with a view to spending a couple of days assessing what we had done with respect to geological domains and how we treated it mineralogically and metallurgically. Like, were we trying to build a mill that was going to last 100 or 200 years, or were we focused on this is what Pebble West looks like mineralogically, and this is what we need to build a mill for that 20-year period, and the next 20-year period we could get different ore, and so we're going to have to build a different mill or change things. And that's the other great thing about Pebble is it has these alternatives, not just in mining, but also metal deportment. Some areas are much richer in gold, and some areas, have softer rock. And so, you build a 180,000 ton a day processing plant, but you can pump 250,000 tons a day because the work index is low. And actually, he came away from that 2 days later, and one of the greatest compliments is that he told, Bob Dickinson, myself, Steve Hodgson, Doug Casey, and Marin, he said, when it comes to the thing that's nearest and dearest to my heart, how to make a mine out of an accumulation of metal by assessing geological domains and the metallurgical processes, he said, I really don't have anything to add. It's covered. That was just, a real sense of accomplishment when he told us that. There's two sad things about David. One is that he passed away last March, and two, that I was trying to get him to Florence because he had been one of the original, people that had worked on the in situ back in the 1980s concept and had some affiliation with Florence and some of the other buried oxide deposits. And he wanted to see what we were doing and how we were going about it. But, I called him in 2019 on a couple of occasions, but he physically wasn't doing that well. I mean, mentally he was okay, but he'd hurt his back on one occasion and been in a wheelchair on another occasion. His legs weren't working well, so we never got him to Florence. But I had great admiration for him. In fact, one of my good friends, a guy named Ken Pickering, who, it's a small world, Ken graduated from UBC, a mining engineer, same year as Bob Dickinson and Dave Copeland, and they kind of knew each other at university. Bob in geology, Dave Copeland in geological engineering. And Ken went on to be the GM at Island Copper, owned by Utah Mines. And Utah was who David Lowell worked for in the 1980s, 70s and 80s, and was the discoverer of Escondida. And Ken was sent in 1986 or 87 to Antofagasta to build Escondida. And David was there at that time. Ken ended up being the CEO of Minera Escondida for 20 years and went through, building a mine that had a 35,000 ton a day concentrator with 100-ton trucks, and being told that should last for at least, should look after everything because it had to last at least 20 years. And over that 20-year period, he took that from 35,000 tons a day to, I think, 185,000 tons a day concentrating capacity and 300-ton trucks. But so they knew each other extremely well from those days. So, again, sad day when David passed, but he had a great life. I think he was about 94 when he passed away. I do know that the Lowell estate is still on the share registry. He wrote some great letters of support for us during the public commentary period.
That should count for a lot. Certainly a good man, and certainly a guy that we followed and continue to follow with some of our investments in the sector. His legacy continues on here and will do so for a long time.
I forgot to mention that Ken Pickering now sits on the board of Northern Dynasty and Thiessen.
Yep, and two companies that we're certainly familiar with here. Well, Ron, ESG has become a big thing. And I like to say this, and I know our audience listening has heard me say this multiple times, sound like a broken record. But, ESG is really the people that ask this question, most of them anyway, don't understand the blood, sweat, tears, and stress that go into ESG. And I know before this, of course, good management teams have always practiced CSR and on back before that. And you're no stranger to these types of acronyms. But ESG seems to be getting traction here, at least for what I see is probably something that'll become a little bit more permanent and measured. But, talk about your guys' efforts here. You guys have put out an ESG report. You guys are continuing to work at the local community level to support local community, to get those Native Corp lands on board with you. What specific work is being done on that front to ensure community alignment?
Let me start with the very first thing that happened at Pebble. After we signed the option with Cominco, the first team of people we sent in was led by a guy named Bruce Jenkins. And Bruce Jenkins' background is he is a hydrological engineer and fisheries biologist. And Bruce and his team went out and visited all of the villages on the lake and a couple of the towns that were on the coast with a view of getting people's assessment you know, and most people out there didn't know much about mining, but without question, the number one topic was fish. You know, and it was, fish had been the mainstay of their lives, whether it was sustenance fishing for the interior communities on the lake, or whether it was the commercial fishery in the bay. And you know, Bruce was the first CEO of Pebble, Alaska, as not as a mining engineer, not as a geologist. And Bruce's mandate was to ensure that everything we did, the environment and the communities got as much attention as the geology, the metallurgy, you know, and the engineering. And he still talks about that, about how, you know, this project focused not just on geology and engineering and metals and the economics, but took into account all of these other things. And, you know, and Bruce was the original guy who came up with hosting community meetings on a pretty regular basis and having information employees in each village, that if people had questions, they wanted something, they could ask somebody local, somebody that they could talk to, and that person could go find out the information. So there's been an outreach, I mean, basically since day one. And in terms of the villages on the lake, I'm not saying that 100% of people support us, far from it. Not in some cases, some villages don't even, that has never stopped us from engaging with those villages and talking to them. We had when Anglo was there, we had a pretty substantial fund that we put together for community projects, for scholarships, education, but also just community projects. And it didn't matter whether you were for or against the project or whatever it was. If it was a worthwhile community project, you know, it got funded. And we ensured that we being Anglo and Northern Dynasty, we weren't the majority on the evaluation board for those projects. So we have continued you know, we've given work to all of these. We've helped them set up contracting companies. The village of Iliamna, we helped them. They'd never run a room and board operation before. So we helped them acquire a bunch of properties in the village of Iliamna, helped them fix them up, showed them how to run a catering operation. We brought, you know, a catering company in. So the objective here is that you work with them, you know, and the first year you run it, but by the second year they have to be able to run it. And we contracted with Non-Dalton to look after our airlift, our helicopter services, and brought in a helicopter company and said, you know, we want you to work with these people and train people around helicopters, helicopter servicing, groundworks, and all of this. In fact, one of the greatest stories up there is that some young guy, you know, 16 years old, you know, started off working just as a ground guy, slinging, what's called slinging for helicopter loads. Next thing he ended up as a driller's helper. He made enough money that he went back and got himself a helicopter license, and he's probably the best helicopter operator out there, you know, and he started with us back in 2005. Once we got to the point where we started seriously considering permitting, you know, in 2015, 16, we started working with the villages on the lakes to get them invested in the project, so that it was not just giving you contracts. How can we utilize the things that you've got to help you earn money? And we entered into what are called right-of-way contracts with most of these villages, where we were paying them an upfront fee, not huge, you know, $250,000 a year, for the option to have this right-of-way. And then the idea was, once the mine makes its final decision to go into production, then you will get a toll fee for every ton of ore that or to every ton of concentrate that crosses your property. You're going to get a fee. In addition, there's a royalty that each one of these villages entered into, embedded into those right-of-way contracts. We trained a lot of people. We were for probably 10 years, we were the largest employer through these joint ventures with the village corporations in the region. So You know, we know that people in that area need to see and get something out of a project like this, because otherwise, if there's nothing in it for me, why would I want it? You know, they have to see opportunity. Otherwise, all they see is downside. And that's one of the challenges that, you know, I respect the coastal villages, which are over 100 miles away from the Pebble project. And there are no roads, there's nothing. There's, you know, the only way they can get into Pebble is air commuting. And they have a situation where we're not going to go across their land. You know, some of them may be able to come and work. You know, we send planes out to pick people up. But what is in it for me in terms of the development of that project? And maybe it's only risk. You know, and they go, well, what is if I can't get any you know, right of way contracts or big service contracts out of them, then how do we do this? So that's why we developed that Pebble royalty structure and said that people that want to sign up for this, again, you don't have to tell us that you're in favor of the project. You don't have to say anything, and we'll maintain confidentiality, but at least you'll get, and we modeled it on the permanent fund dividend, so that there's an NPI that's put together, aggregated into a trust, and it distributes money. And our objective was to distribute somewhere in the neighborhood of $1,000 per man, woman, and child for the population in Western Alaska. Now, you know, it's not a lot of money in and of itself, $1,000 per man, woman, and child, but that's what the permanent fund dividend pays out to them. And that happens in many families to be the largest source of cash for some households, you know, where there's 2 parents and 4 or 5 kids. That's the largest source of cash. And there's about, you know, 7,000, 7,500 people that live in Western Alaska in totality. Probably 80-85% of them live in those coastal villages. So that's one of the things that we've put out there. It remains in place, and we're hoping that, you know, over time, everybody signs up for it, because I'd like nothing better than to pay out that money to those families every year.
With Pebble's development, does it seem like you and this opportunity is offering people of that local region? I'm not talking about places that are 100 miles away or 500 miles away in Alaska. I'm talking about local communities. For those people, those youth, those middle-aged folks, even older folks, to step out and say, these are the opportunities that Pebble offers, whether it's medical, whether it's food, whether it's driving truck, transportation, labor, all of these things. It's essentially a type of environment that a lot of people in the continental US have got to appreciate throughout their lives. That is this opportunity, because otherwise, if this wasn't here,
it's an area of out-migration. I mean, I can tell you we've run what we call elders seminars, where we bring, you know, 50, 60 elders into Anchorage and have other people come. Like, you know, we had a group of people from Nanacorp, which is the Red Dog mine. You know, and they went through all of the anxiety of building the Red Dog mine, the largest zinc mine in the world above the Arctic Circle, and with native villages, you know, nearby in the 1990s. And we had some of those people come down and talk to the elders from this area, and, you know, explain to them, you know, what the changes were. And there were some big changes. The one I like the best is the lady that walks over to the edge of the room and she flicks the light switch on and off. And somebody says to her, well, you know, it brought electricity. She said, yes, it brought electricity. But she said, I'm really talking about my child's education, my children's education, because prior to Red Dog and above the Arctic Circle, during the school year, it's almost always nighttime. And so my children did homework by coal oil lamp. And if you've ever tried to do anything by coal oil lamp, like reading a book or anything, it's very challenging. And so when Red Dog came, we had lights. We had a room full of light. And my kids, their schoolwork improved. Everything improved about it. It wasn't just, you know, the electricity. It was the knock-on of the electricity that was the big benefit in her view. And even the governor of Alaska, his 3 daughters all worked at Red Dog. He's married to a Nana Inuit lady, and he lived up there, and his 3 daughters all worked at Red Dog, and that's how they paid for their university education. And in the region we're in Western Alaska, there's a real out migration, and the elders realize, and the parents realize, that if there's not something to keep their kids there, they're going to go elsewhere. Even if they go elsewhere to go to school and stuff, if there's a real opportunity back in the area, then they will come back. And you know, it's a nice area. It'd be a nice area to live in. I mean, you'd want to go to Hawaii or the southern US for a holiday in the middle of winter to take a break from the darkness, but you know, and the mine sites, there's no villages close enough to the mine site that we have to move anybody. The closest village is 19 miles away. And even at that, Andrew, there's not a lot of people that live, you know, I'm going to say within 500 square miles of the property. We need most of the working area people in the entire area. I mean, if you think about it, 7,000 people, if a third of them are working age, which would be logical, then you're talking about 2,000 people. We need, you know, 1,000, 1,200 people working at the mine site. We probably need that many people working in service sector jobs on infrastructure, on trucking, shipping, ferry operation, and catering, and all the rest of the stuff. I think almost everybody in the area. And when you look at the commercial fishery, there's hardly anybody employed in the processing end of the business. Yes, there are people that work on boats. It's an industry that lasts 2, maybe 3 months a year, but something like 98% of the people that work in the process plants are not Alaskans. In fact, they're not even Americans. They're immigrant labor that comes in under a cultural exchange visa to work there. You know, and the governor has pointed out that many times. So we've, you know, this whole time we've tried to lift up young people, give as many jobs as we can. We continue to give, you know, scholarships and the like to people. And we know that it's important that we ensure that when this thing goes ahead, there's going to have to be a hospital built in Iliamna, New Haven. I mean, right now, I think there's 5 villages on the lake, and there's 1 medical clinic, and there's no doctor in the clinic. There's a nurse and a nurse's aide. You know, we will do much more than that. We'll improve the schools that are there. I mean, New Haven has a school. So the biggest village on the lake has got 200 people in it. The closest village to Pebble is Iliamna, and it's probably about 75, 85 people in the wintertime, and maybe 120 people in the summertime. And like I said, you talk to the people that have worked at Pebble, and it's really it's heartwarming. I mean, Jimmy, the driver, he kept on saying, you know, just take me to Anchorage and put me on TV. I'll tell them that I've never had a job in my entire life. My entire life, I've, you know, gotten money from here and there, but I've never really had a full-time job. And you guys gave me a full-time job. It feels so good. You know, some of the other people, you know, once the exploration got shut down and stuff, they wanted full-time work, and they ended up having to go up to the North Slope. And while we kind of indoctrinated them to full-time work, which was great, and they enjoyed that, they would have rather had it in Iliamna and nearby, where, you know, they could go home every night. That's, you know, fundamentally the plan. I mean, we did everything with helicopters. Environmentally, you can go up at Pebble and you look out on the valley, this 25 square mile valley, and you look for a drill site. You can't see it. There's no roads. It is still pristine, even though we did 1 million feet of HQ diamond core drilling at that site. You know, we didn't build any access roads because we said we don't want people going into this area. You know, if you build access roads, what ends up happening is you get ATVs and all kinds of stuff going in, and you know, and people are not happy about that. So environmentally, we really did a great job on that front. Everything was helicopter assist, helicopter lift. To the extent we could employ people locally, we absolutely did that. Same with employing Alaskans first. Something that, I really learned from Russ Hallbauer at Gibraltar is, the Gibraltar mine, if there's two candidates, and the ones living in Williams Lake, that's who gets it. Or if they really need the other guy who doesn't live, they'll do everything they can to encourage him to move to Williams Lake because they want their employees to be invested in the community. And we're the same way with Alaska and Alaskans.
Ron, it's funny because it seems that, at least from my perspective, that on the fishing side, there's a lot of import folks, whether it's from continental US, other countries, et cetera, that participate in the fishing industry in Alaska, not native Alaskans.
Yeah.
That's just a simple perspective. I don't even have any research to back that up, but that's what I think is correct.
I know it is.
There, exactly. And you guys, of course, have been fought on this issue, and you guys obviously have done some homework and know. And on top of that, you're unlocking a local community, you're unlocking supply chain efficiency, you're unlocking infrastructure, whether it's baseload power, nat gas plant, et cetera, roads, supply chains to reduce the price of gas, to reduce the price of milk, pizza, whatever it may be, Ron. And you're also unlocking that community potential. And that's the point, because right now you don't have that. You don't have the educational opportunities. With this project, you're able to go in and not only suggest things for the community, but you're also able to listen to the community, basically ask them, what can you do to also improve? It's a collaboration. And that's the point that needs to be put across here, is that there's so many people who have an armchair vote from another place in the United States that think, this is my favorite fishing hole, Ron. This is my favorite ATV location, Ron. I've seen the photos. I've seen the site. It's none of that.
No. When Don Jr. posted his social media site and his pictures and said, we can't afford a mine to destroy this, he was at a location that was over 100 miles away from Pebble. And he was treating it as if all the fish returned to exactly the same spot, and that's where Pebble was. There's 8 different watersheds. In our watershed alone, there's over 6,000 creeks, streams, and rivers. And Pebble's on 3 streams that, don't flow in the valley except at freshet in May, June, and maybe if there's enough rain in fall. There's hardly any fish that return. In fact, the number is 4/100 of 1% of the returning fish return to the Koktuli watershed. Itself is about 200,000 acres. It's ridiculous. I mean, the picture that people paint. Western Alaska is the size of, Oklahoma or Ohio. There's 7,500 people live there, and we're going to occupy one valley that's 25 square miles. And we're going to generate billions of dollars of GDP and value. And you know what? And it's not either fishing or mining. It's fishing and mining. I mean, I have a personal history at Bristol Bay, Alaska, going back to the 1970s. I won't get into it all, but I know that fishery pretty well. And I know that that's a great fish. It's the #1 sushi salmon, sockeye, but almost 90% of the product goes into a can and never makes it to the sushi auction at the market in Tokyo.
Yeah.
And that's because the energy cost is 60 to 80 cents a kilowatt hour out there. If we bring them cheap energy, in fact, I know the second, third largest fish producer out there that owns that. And, I talked to him, I said, if we brought you 8 to 10 cents kilowatt hour, couldn't you flash freeze that sockeye salmon? You could process it all in Dillingham or king salmon or knack. You could have sides that are flash frozen, fillets that are flash frozen, and they could be shipped to the Tsukiji market in Tokyo and sold at $15 a pound for sushi instead of putting in the can. I mean, their capacity to process fish is also limited because it's so expensive to process those fish there. And because the Canada-US treaty doesn't allow them to technically take excess fish into Canada anymore, a lot of fish gets dumped because, the boats come in, they're laden, and the processing plant says, I can only process this many fish in the next 24 hours. The rest of you guys got to go find a different process plant or take your load and dump it. And that happens all the time.
They don't understand. It's not, and by the way, if you can, send me some sockeye. I'm on farmed fish here, so please ship me some. I'll reimburse you for the shipping cost. But look, they don't fully understand here. This is not about, the fish is being used as an excuse. In my view, the fish is an excuse because when you look at the data, when you look at the science, when you look at the statistics, this project is located in a location. It's literally like saying, I am not going to let this proceed and I'm going to forfeit the economic benefits because this project is of scale that it will benefit local community first, state of Alaska, then the United States, then of course it'll go beyond the United States into the world. The point being that I am going to take a pass on this project. You know, Donlin's fine, Red Dog fine, you know, it's all good. But this project, no. And because of that, I'm going to basically wager that this project is at risk, the same as taking a risk of nuclear power and having some kind of reactor accident. I'm going to take that same standard and I'm going to apply it to Pebble, and I'm going to say, no, the risks are just outweigh the reward here. I'm not going to let that happen, which is silly to me.
Interesting that you say that. I mean, the conclusion in the FEIS by AECOM, one of the largest, most preeminent engineering companies, especially environmental engineering in the United States, who were the engineer of record for the Army Corps of Engineers and the Army Corps of Engineers, their conclusion on our tailings storage facility, and it is a unique concept that we have there. And, you know, we put a lot more money into that tailing structure than people normally would. I would say it's at least 20-25% higher cost to us, CapEx wise. But their comment in the FEIS was, we cannot conceive of an event or a series of events, including human error, which would lead to a catastrophic tailings failure. So they never did model what we'd call a catastrophic failure where 100% of the tailings is lost. They modeled a modest failure, I think 20% or 25%, which, you know, isn't small, but because the tailings facility faces a large plain, it doesn't go out in a tidal wave downstream into Bristol Bay. It dissipates within a few miles onto this large flat area. I mean, we're not in an area of Alaska that looks like your concept of Alaska. It's very flat where Pebble is because 10-12,000 years ago, glacial ice came and basically took all the mountains away. And so the risk you talk about there is, I won't say zero risk, but it's like you say, the chance that there's a nuclear risk. I mean, Fukushima wasn't a nuclear risk. That was a environmental tidal wave risk that people had not contemplated properly.
Yeah, that's correct.
And I don't think it's the people there. The people there aren't making that assessment. They're having the hell scared out of them by the ENGOs. I mean, NRDC raises a ton of money on Pebble. NRDC doesn't ever do any scientific studies. The only thing NRDC does, and they tell me this, we're an advocacy group. We're not science-based. You know, we advocate. And the guy said to me, he said, we will never, ever approve Pebble, no matter what you do. We do not believe that there's any mines that should be built in North America. Because I said, well, you know, give me an example of a mine that you think is responsibly operated that you'd be prepared to say, because, you know, you drive a Tesla, I said to the guy. I mean, you have a computer, you've got a cell phone, you rely on metals. He said, it's not my job to assess what is a good mine. And my job is to make sure that no mines are ever built in America.
Ron, well, let's hold up there for this segment, and we'll come back here with the next segment and pick up where we left off.
Andrew, just some closing comments here, winding up. The project that we've been talking about mainly here, and the project that we took into permitting is the 20-year mine life, and the purpose of that was to try and create something that people could get comfortable with. We could obtain, if you will, our social license We weren't going to use cyanide in it. It was going to have the smallest footprint possible, 5.8 square miles as opposed to the 5 square miles that the Obama administration even said that they would consider permitting. And so that's why we took that particular project into permitting. I mean, we've been talking a lot about the alternatives to Pebble because it has so much optionality. Things like the gold plant, using alternative lixiviants, an extended mine life, take it beyond 20 years because we know the resources are there. Expand the processing plant because once again, we know that the resources are there. And even the large-scale underground mining concept, bulk underground mining, again, that would enhance grade and mine life. I want to remind your listeners and yourself that those alternatives, which have been part of our studies all along and will continue to be studied and probably looked at opportunistically at the relevant time in the future, would require a separate round of permitting as and when it was decided to try and bring those things on.
Okay.
Thanks.